Okay, again, this is understanding the value of professional liability insurance. It is part of our school of risk management, part of our webinar series. We'll have 11 webinars in 2019 that policyholders can take for credit. This one will talk about professional liability insurance. And we really need to talk about what insurance is. It's a risk transfer tool. It's one of the ways you can manage your risk on a project. There's various ways of retaining the risk or transferring the risk, and insurance is one way to transfer some of that risk. You transfer the risks of business through a number of ways, a number of insurance programs, and professional liability insurance transfers some of that risk, and it's the risk that someone will be damaged because of your negligently performed professional services. As one court said, professional liability insurance only applies if the underlying cause of action is based on a wrongful act or omission in the performance of professional services. This court made it clear that you operate a professional practice through a business entity. And professional liability insurance is meant to cover your negligence in the performance of professional services and not your incompetence or your negligence in the operations of your business. Now, what we'll do is we'll walk you through a professional liability policy, the CNA professional liability policy. And in doing that, we'll look at the various parts of the insurance policy to help you explain, to help you understand more about what's behind each part of the insurance program. Now, insurance policies are relatively set. They have various parts to them. And we'll go through the parts that are in a professional liability insurance policy, and they mirror the parts that are in some of your other insurance policies. We will also point out that a professional liability insurance policy is supposed to be written in plain English, so it can be easily understood. But you really need to understand what's in the policy and what's in the policy's definitions, because even though it's stated in plain English, it addresses some concepts that are somewhat alien to your professional practice. The first thing in a policy is the policy declarations page. And the policy declarations page has the basic information about who's insured, how long they're insured for, and some other information. One of the things on the policy declaration page is the policy term. We also list the knowledge date. Kevin, can you talk about what the policy term is on a professional liability policy and why a knowledge date is important?
Absolutely. So a couple of things as we start to talk through this, just to set up as we go through the policy, is regardless of the type of policy we're talking about, whether this was your general liability or professional liability or auto policy, other things, many insurance policies are set up the same way. So the declaration page as a starting point is really there as a guide to highlight key information that's either defined in the policy or that is going to be a determiner as to key aspects of the policy that's being provided, whether it's your limits of coverage or other aspects. So Frank, specific to your question, policy term deals with the length of time that policy is going to be in force. So within our program for small sole practitioners, that policy term may extend up to 3 years in a time frame with 3 separate policies to cover that. For other firms, and more traditionally, that would be a 12-month period, for instance, January 1, 2019 to January 1, 2020. The knowledge date deals with the aspect of when the firm knew if a claim or a situation that could give rise to a claim was known. And when you put these two pieces together, you're really left with the type of policy you're dealing with. So unlike your general liability, auto, and other coverages that provide the basis of coverage based on when the occurrence happened, the auto accident, the injury at your location, et cetera, professional liability policies are issued on a claims made and reported basis. And so the distinction when you look at this is that in order for a claim to be covered under professional liability policy, the claim has to be made, and we're going to talk about that a little bit later in the conversation, during the policy term. So that defines when the lawsuit or the letter or demand against you is made. The knowledge date is looked at as a second piece to both when the services were rendered and also when you knew about the claim. So again, we'll talk a little bit more about that as we go along, but the most important thing you need to recognize in these types of coverages is there's really two facets to the claim being covered. If the claim is made during the coverage term, the policy term on the declaration page, and then secondly, do you have what's called prior acts coverage that would extend from the time that your firm opened or another date or when the services are rendered, and then finally when you knew about the claim. Sounds very complicated, and trust me, the first time you hear about it, it becomes a little bit of a piece. But as we walk through this, I think we'll create some additional clarity around it.
Okay, thank you, Kevin. One of the other things listed on the policy declarations page is the endorsements that are attached to the policy.
Yeah.
And we'll talk about them at the end of the program because endorsements are sometimes required by specific state law, or they may be ways to expand your coverage. And so we'll talk about that a little bit more later. The next part of the policy is the actual policy. And I've highlighted three areas here that I think we need to talk about in greater terms. But there's a couple other ones that I'm going to ask Kevin about. And one is the supplemental insuring agreement. The insuring agreements in the policy will describe in more detail, but there's this also supplemental insuring agreement. And Kevin, what is that?
Yeah, so again, we talk about the structure of the policy. Coverage is always page one behind the declaration page, which is a declaration of what the policy is covering. So in between the very broad coverage of the insuring agreement, what do we cover under the policy? And then once a claim is made, how do we defend and settle that claim on your behalf as we work through it is what's called everything else. So supplemental insuring agreement deals with coverages that are not dealt with in the base policy, but are special or unique to certain situations. So within the CNA Shinnerer policy, one element that we're trying to support is recognizing as firms grow or diversify that there may be some interest for an architect or engineer to get involved either through a separately related company, a joint venture relationship, or maybe through just one company that may want to take on a construction aspect or an installation exposure to the consulting services that you're providing. So within our policy, a supplemental insuring agreement would have what's called rectification coverage. So that is a separate element of coverage that says that in situations where you're responsible contractually or through services for design and construction at the site, you have a unique situation during the construction phase where you're in control of the location and you may come to identify that there's been a design error, a miscalculated piling that's going to lead to issues as the building goes up in height, or placement of the building, or some other aspect that is going to pose a problem in the future that you'd like to rectify. And so this provides a first-party access that you can provide that information to CNA, and they would review that and treat it as the claim would normally be handled under the coverage to help rectify and solve that situation. So again, when you see supplemental insuring agreement, those are generally dealing with coverages outside of the mainstream that are specific to situations or conditions in your practice that could arise.
Kevin, one other thing I would like you to comment on is that there are other payments that the policy can make, the CNA policy that the Shinnerer uses can make. One of them is this crisis event expense. And can you talk about what those expenses might be?
Yeah, absolutely. And again, when we add this, these are things that are added to the policy that are often have separate sublimits or some other separate level of coverage from the baseline of the traditional professional liability risk. Because being with the program this long and seeing different elements, there's often ancillary exposures that architects and engineers have on everyday actions that could come into play that we're trying to help you out more holistically. So specifically with crisis and event expenses, this is a supplementary payment that provides a shared cost benefit up to a certain amount in the policy, both on one individual situation, one claim, or over the life of the policy term on the policy. One area that we see has come up a few times is we had a situation where an architect was working on an airport project. Whether there were economic conditions or other things around the scene that was driving the issue, the airline and the transit authority ended up firing the architect on the basis that they were not providing good construction phase services and issues with design and cost overruns, et cetera. But separate from just making the professional liability claim, they decided to go to radio, TV, newspaper, print, and tell everybody how bad the architect is. And so in that situation, not only do you have a direct claim and a reputational risk to try to resolve, but now you have a public relations risk. So crisis event expenses at a very base level provides additional coverage, as I mentioned, to get a public relations firm to help counterbalance that issue in the media, whether it's going to be at a future trial or other aspects. So the fact that a claim's been presented against you presents the possibility of a public relations risk that could provide that. This coverage actually expands more broadly, too, to say if you have an unfortunate situation where maybe a principal passes away, the perception from a public relations standpoint may be that the firm's no longer in business. So in certain situations like that, you can get coverage here to help communicate out that you're open for business and keep the business running. You could have situations of workplace violence at your location and people feel that the building's not open or safe to use, et cetera. So there's several triggers along the way to do it, but overriding, that's dealing with the public relations risks that architects and engineers firms sometimes have.
Okay, thank you, Kevin. Now let's look at these three highlighted provisions. One is the insuring agreements, and the CNA policy actually has two basic insuring agreements as part of it. The one is the professional liability coverage, and that is defined as coverage for a wrongful act that results in a claim anywhere in the world. It's worldwide coverage. And the other part of it is the pollution incident liability. And that was added about a decade ago or so, I think. And Kevin, why was that made part of this policy?
Yeah, and just looking at the calendar and realizing it was probably more like 20 years ago that this coverage was introduced under the policy. And the reason going back was really that a lot of the pollution side or pollution coverage was dealt with in your general liability coverage or other areas. But what we came to recognize and realize and build off of is that just by practicing architect and engineer, you could have a claim for negligence, that you didn't meet the standard of care that could result not only in damages to the building or injury to person, but could also result in pollution at the site or other things. So they were intertwined. And so we introduced into the policy two elements. One is full pollution coverage where the claim is arising from negligence, but also recognize, especially during construction phase services, that you would have people visiting the site on property in a normal activity to make sure that what's being constructed is in compliance with the design documents, et cetera, attending meetings. And you could have an individual that creates an activity. For instance, they kick a can of cleanser or turpentine that is at the project site unopened, goes into an open waterway and flows to an adjacent property site, causing damage to the soil and the grass there. That you could have liability just by the actions at the site. And oftentimes, general liability or other areas did not fully provide coverage, especially for the economic damage risk, the cost to replace element. And so in our policy, we're really trying to envelop the full pollution exposure for things that can happen at the project location, whether it's the result of your design services or your activities at the site.
Okay, thank you. And you mentioned earlier about claims made coverage, and the insuring agreement clarifies that how the policy is really written to cover, and it's claims made and reported. And again, would you explain what that means and how that really targets what the policy is covering?
Yeah. So again, from the standpoint of direction, um, if you have for instance, a general liability policy let's use an auto policy. If you are involved in an automobile accident, the date that the accident occurred and when you report it to the company is going to determine when that claim is made against the policy. Similarly, if you have somebody that slips and falls at your office location and they come back and file a lawsuit a year from now, under that policy, they're going to ask when the slip and fall happened, and that policy, even though the policy term may have expired, would cover that particular claim. Claims-made policy, again, is dealt with the fact of when the claim is made, when the lawsuit is made, or the letter is made by the owner saying that you were negligent in the performance of your professional services. When that's received is going to determine when the claim is made. Again, a secondary piece is also dealt with a term called full prior acts or limited prior acts or no prior acts. And that's the second level of consideration. When you have full prior acts, that means that when that claim is made, the adjuster is going to ask when the services were performed on that particular building or location. And with full prior acts, from the time that your doors open as a business, including predecessor firms, you have full coverage. There's no limitation as to when the services are rendered. For other firms, especially new to the insurance market, buying the policy for the first time, the policy may provide no prior acts, which means the inception of the policy is not only covering claims made during that time frame, but also limited to the services you performed during that time frame. So as a business owner, other aspects, the two most important things that you want to consider is, if you're new to buying in the industry, standard is that you're not going to be able to purchase full prior acts coverage initially, that you're going to need to show some level of track record. In our case, it's 1 year with good loss experience. And at that point, you can get access to the expansion of that coverage. So I always recommend that firms have full prior acts coverage if they're eligible for it to purchase. The second element is that just if you're buying contract to contract or looking at this policy as a contractual obligation because the owner wants you to have it, claims-made policy only works if the policy is in force. So you need to treat the policy as an ongoing element. If you decide to cancel or discontinue the policy and a claim is subsequently made on a project that required insurance in the past, there's going to be no coverage because when the claim's made, the policy needs to be enforced. So two strong things that you want to consider both in the selection and purchase of this coverage.
Thank you. And in talking about coverage, one of the sections is on defense and settlement. The defense is fairly clear. The insurer has both the right and the obligation to defend any claim against the insured that are payable under the policy that are based on negligent performance, even if the claims are specious, even if there's no basis for the claim, or even if they're fraudulently made, you're going to have the defense, you're going to have the insurance company working with you. And the defense and settlement part of the policy also talks about settlement. And in the CNA policy, I think it was the first one to come out with a provision that says it will not be settled without the informed consent of the first name insured. And Kevin, what does that really mean?
Well, a couple things. One is traditionally in the marketplace for this coverage, and with other markets in this business, you will still see this provision. It's affectionately called the hammer clause. And so with the settlement piece, what a hammer clause says is that at some point in the process, if the company that's insuring you has an actionable settlement that they can sign, seal, and commit to, and you as an insured decide that you do not want to settle for that amount, then the insurance company has an additional hanger that should the claim later settle for an additional or higher amount, their liability is limited to the amount of the original settlement. So there's really two-pronged here. We recognize, being in the industry for this long and having experience with architects and engineers, that it's really a partnership and a communication style. So you'll recognize that in our insuring agreement, we have no hammer clause. We're not going to play that game. and we want to make sure that we have an informed consumer. So we're not looking to settle, without knowledge and understanding, and then that communication will flow through. Obviously, you have a reputational risk, other aspects with the owner, so you want to have full consideration of the terms and what's being happened so that we're all walking in the same direction to the best possible resolution, which is in often trying times or difficult situations.
So there is no way for the insurance company to really force a settlement unless the named insured, the policyholder, really agrees that that settlement is realistic.
Correct. And informed really kind of defines that element of decision, yes.
Okay, let's cover some of the other definitions in that policy, and these are the five we'll cover. Professional services, who's an insured, what a wrongful act is, and claims and circumstances. Now, the definition of professional services in the CNA policy is extremely broad, and I think there are a number of policies out there where the coverage may be tied to what you perform as a licensed design professional, which really restricts what the coverage is for. I think the CNA policy is extremely broad. And Kevin, are there things that aren't covered under this in professional services?
Let me step back. So obviously, if you have a very diversified business where you have IT, consulting, or some other aspects, there could be portions of your business that are not traditionally covered under an architect's engineer's professional liability. And in conversation with an insurance broker or an insurance professional, you'd want to have those discussions broadly to make sure that you're fully insured for all of your risks. That being said, within the design industry, you'll recognize we say in your practice, as Frank mentioned, there's no issue of license, and some of the older policies from other competitors would have language like legally qualified to perform or some other element. So you're right. The goal here is really, as an architect or engineer, is you can define where you want to go and provide coverage. The other element too is anytime you have as a buyer of insurance, there's a thing called contract of adhesion, which means that the law or the courts will look most strictly against the insurance company as to interpretation and coverage within the policy. And so you should recognize, like within our definition, not only are we broadly defining services or areas of practice that architects and engineers can be involved with, but we wrap it all up with the wonderful word technical consultant, which it's not bolded. Therefore, the Webster's Dictionary is going to define or decide, what that definition is. And we purposely put it in there because we recognize that architects and engineers may be getting into other areas, whether material transparency, consulting, or other emerging elements are important so that we can kind of wrap that issue, around it. So again, you definitely want to have a conversation with your insurance professional, your insurance broker, to make sure that your company is covered for the risks that are presented around that. But our goal is that this should never be a barrier for firms to practice effectively.
So if you're an architecture firm, you may be expanding and working with clients on brand awareness or something like that. And you're really doing it as a professional service firm, as an architect who appreciates that clients need to have assistance in that area. And you're covered because it's a basic professional service.
That's a perfect example of that.
Let's talk about who's insured by the policy. And this is what the policy language says. And I think it's interesting because it's any past or present partner, officer, director, member, stockholder, or employee. And we get a lot of questions, and we got a lot more questions when firms are downsizing about what happens with a former employee. If that former employee leaves today and tomorrow gets sued personally for the services that employee performed under the former firm, will that employee have coverage? And I think the answer here is, look, if they were part of that firm, they were being supervised by that firm, they were acting within the scope of their duties for that insured, even if they're no longer employed by that insured, the coverage applies to them. And which should, I think, assure a lot of people who are going out of their own that they're not going to be held responsible individually for the services they performed for the firms in the past. It also talks about retired partners. So they are covered, and in fact, if they're performing services on behalf of the firm that they're retired from, they still have coverage for that.
You know, the other aspect, Frank, that we get around this question is the vicarious liability issue. So the one distinction that you want to understand when you're buying this coverage is our goal is to provide coverage not only for the entity or your other related firms, predecessor firm names, et cetera, within that policy, but as Frank's relayed, whether it's retired, past, present, future, partners, employees, et cetera, that's all covered under the policy. But recognize that you also have vicarious exposure to the firms that you hire. So as an architect, you may be, hiring the engineering trades and consultants. As an engineer on infrastructure projects, you may have specialists or others that you're hiring on. So if you're hiring a consultant who is providing his level of expertise and bringing you that so that you can incorporate it into the overall design, the policy that you buy provides coverage to the extent that someone says you're responsible for that individual. So again, the vicarious exposure that you have, but you're also driving to have the firms you're hiring should have their own coverage. Your policy does not provide first-party coverage for the entities that you hire. They should have their own coverage as well. Oftentimes in conversations with clients or understanding that sometimes becomes a little bit clouded. So just an important distinction.
And later on, we'll talk about subrogation, and there's two directions subrogation can go, and we'll talk about subconsultants at that point too. Here's the definition of a wrongful act in the CNA policy. What's interesting is that we often talk about negligently performed professional services, and the policy never mentions the word negligence anywhere. It doesn't have to. Acts that cause liability in the performance of professional services are, by their very definition, things that do not meet the standard of care and therefore are negligent. I think this is interesting because it not only covers your firm, but it covers your firm for your participation in a joint venture. And in a joint venture, you should realize that you have a lot of risk. You have a lot of risk not only for what you do, but for what the other joint venturer might be doing. Because in the eyes of the law, in the eyes of your client, that joint venture is one entity, and there's joint and several liability there. So either party to the joint venture can be held responsible. And this makes sure that you have coverage if you're the one held responsible. It does also define a wrongful act in a way that you know that you cannot have a criminal or a fraudulent act and have it considered a wrongful act. That is not an activity that doesn't meet the standard of care. That's an entirely different risk involved that the professional liability insurance policy does not cover. Now, we also need to talk about how it defines a claim in a circumstance. Let's talk about a claim. This is what the definition for a claim is. One of the things you should notice is it's a demand for money or services alleging a wrongful act or a pollution incident, because, of course, that's part of the insuring agreements as well. One of the things you should always be concerned with in your contracts is when a client or perhaps a prime decides it should have the right to withhold money from you, because that's not a demand for money or services. If they have a contractual right not to pay you, and many developers do this, that's not the same as a demand for money or services. In order to have professional liability insurance coverage attached to that, there really has to be some other action. So somewhere along the line, there is a demand that says you had a wrongful act, you were negligent in your performance of professional services, and that's why we are demanding the money or services. And circumstance, I think the CNA policy was probably the first one to extend coverage really to a circumstance. And could you explain a little bit about what that really means?
Yeah, the question comes down to whether or not the situation that you have meets the definition of a claim versus something that feels like a claim but it's not quite there. And the distinction within our policy is that if you have a claim, then you're required to report that to CNA as the carrier. If you have a circumstance, it's voluntary. You don't have to report it. There's some benefits to doing so. You get claims assistance if we need to hire an attorney or an expert to help in defending you in the circumstance. That's a cost paid by the carrier and not against your deductible. So there's some things to take advantage of here. But this situation, again, just deals with something that's not specific to a demand or for money or services. So one situation I tend to get repeated when I'm talking to clients is that Friday morning meeting, right? Wednesday afternoon or Thursday afternoon, your owner's rep calls you and says, we really want you in the office at 8:30 in the morning on Friday. We want to have a conversation about, our project. And you can read the writing on the wall over the last few weeks. Things have been going south. There's some delays, overtures by the contractors. Owner's been, having some issues around that. So is that a demand for money? No. Is it a demand for services? No. It's a demand to meet, but it just doesn't feel right. So that very well could be a circumstance under the policy, a situation that if the meeting doesn't go well could give rise to a demand for money or services following. So again, it's voluntary, but if you contact CNA, provide the information, have a conversation around the situation, they very well may say, well, we have an attorney in the area that you know very well, and we're going to have him join you for the meeting, or ask that you postpone it or some other element. Our goal here is really to kind of meet you where you need us to be. If you feel like it's a situation that may cause a problem in the future, this is an avenue in the policy for you to get assistance, both direct and through communication with folks that are specialized with claims to architects and engineers to resolve.
So it often heads off a claim that might be coming down.
Yeah, that's an absolute threat. The sooner you get involved, the more that it can mitigate the total outcome.
So it may be a letter from an attorney that CNA pays for that basically states that the owner has no reason to expect that the insured firm has responsibility for something. And I think this has been able to cut down on the number of claims dramatically because that early intervention really makes a difference. Now let's go back to the policy language, because one section of the policy, of every insurance policy, talks about exclusions to the policy. Whether it's your auto policy that may exclude you renting out your car for services like a Lyft or Uber, or whether it's your homeowner's policy that may prevent you or may say you have no coverage if you rent out rooms under Airbnb. There's exclusions in every insurance policy. And the exclusions and professional liability policy really helps to define what's not covered, right? And we'll look at contractual liability, liquidated damages, and sale or distribution of goods, because those are exclusions that may or may not make a big difference to you. Let's move on to contractual liability. This is a language in the policy. And basically it says the insurer is not going to cover contractual risks that you assume. And the reason it's in there is if your professional liability policy covered all your contractual risks, it would mean that every contract you sign would have to be looked at by your insurance company, which would then have to rate your coverage based on whatever is in your contract. You would be paying for each contract you sign, and the cost would go up tremendously. So professional liability really covers the normal expectations of your practice, the standard of care, and therefore it excludes contractual obligations. And the policy is very specific that it includes any contractual obligation, oral, written, contract, or agreement right? Including express warranties and guarantees. Many people realize that if you make an express warranty or guarantee, you're promising something beyond what your normal professional liability would be. But the contractual liability coverage, the exclusion, really talks about any contractual provision. It also excludes any obligation you have to pay on behalf of others. So those indemnification provisions that you sign are not covered by, as contractual obligations, are not covered by your professional liability insurance policy, except that the contractual liability exclusion is narrowed significantly by this language. And this language basically says, look, we're covering you for your professional liability. And if that contractual obligation, that breach of contract, or even that warranty would have been something you would be normally responsible for, in the absence of that language, irrespective of that language, you have coverage. So an indemnification provision that says you will indemnify your client for costs, losses, and damages to the client to the extent they are caused by your negligently performed professional services would not be excluded from coverage because the underlying negligence is always going to be covered by your policy. But if that language goes far beyond that, it's a business risk and it's not covered by your professional liability insurance.
Frank, one question that's come up, though, especially on this piece, you said insured liability that exists in the absence of such contract or agreement. Just as a baseline, obviously the absence of that would be the standard of care that a court would find of an architect or engineer, even if you had no contract. Could you briefly kind of define or describe what is the standard of care generally for architects and engineers?
Well, the standard of care is a moving target because obviously as professionals learn more and do more, the standard of care changes because the standard of care is not based on what the law says. It's not based on what an organization like the American Institute of Architects says. It's based on how others in your practice perform their services. And that could be very narrow. It could be how others in your vicinity at this point in time provide their services, or it could be based on your specialty. If you're doing healthcare, it's going to be based on how others provide those kind of healthcare design services. So it changes. As we have climate change, we're going to see a change in the standard of care applicable to design professionals because they need to be aware of climate change. But that standard of care is something that the courts can look at. And if you were ever in a jury trial, that's what the jury instructions would be. Did this person do something that was reasonable at this point in time in this area on this type of a project? So it's a scope of reasonableness that you as a profession develop and modify over the years, and not some arbitrary thing that a court, a statute, or even a professional society sets for you.
Great, thanks.
Now, liquidated damages, I think, are a good example. Liquidated damages are excluded from professional liability coverage because, again, they're a contractual obligation. But they're only excluded if they're in excess of what your liability would be because of your wrongful act, your negligence in the performance of professional services, or your pollution incident. So liquidated damages can be enormous. It can be stated damages and can go far beyond what you would normally be held responsible for. You know, an example might be if you're designing a dormitory and that dormitory has to be open by a certain date, or that college or university will have to put up all those people who would be in that dormitory in some private housing. Huge cost. So they may have the contractor have a huge liquidated damages provision in the contract. If that applies to you, that could be something that far exceeds what your normal damages would be because of your negligence in something that might delay the project. So you have to be extremely careful about those kind of provisions. And let's talk about the sale or distribution of goods, because I think sometimes this is confusing people, because it is an exclusion, right? Because you're not being covered for your uniform commercial code responsibilities as a vendor of goods. But the professional liability policy really understands that you have a very broad scope of duties and wants to enable you to expand what you do. So that exclusion does not apply to these kind of things. Kevin, you might want to mention the technology.
Yeah, recognizing that architects and engineers today, whether it's building information modeling or other aspects, are heavily involved in technology to deliver services. Similarly, the owners that you're working with are utilizing similar technologies. So, but we felt, it's very important to carve out that the exposure that Frank's talking about as a problem is really kind of the shrink wrap, off the shelf, millions of exposure. You create software and you sell it, and it's millions, and they're all the same. So if there's one problem, you've got a million issues. We recognize as architects and engineers that oftentimes you're developing a singular solution that involves technology for that owner, especially like wastewater facilities or other aspects that have control systems and so forth. So this exclusion carves that out to say, if you're designing a system that's specific to the client, then this doesn't apply. And similarly, from an architectural standpoint, if you're doing interior design services, or if you specialize in interior design services, oftentimes clients want you to find that octagon-shaped couch, to fit the space. So again, furniture, furnishings, equipment created or modified specifically for a client are not part of this exclusion. So essentially, we're concerned about the mass-produced exposure and recognize that the vast exposure that you have is more singular client, and that's completely fine.
When you're doing the mass market stuff, whether it's software or whether it's teapots or whatever, you have product liability, and that's an entirely different range of liability exposures than professional liability. So professional liability wants to cover the design aspects, not the manufacturing aspects, not the product liability aspects.
And this is a great avenue too, again, to engage your insurance professional, your insurance broker in the conversation if you feel that you're providing some of these services or may look to expand, because there are insurance solutions or ways to manage the risk, just may not be specifically, under a professional liability policy.
Okay, let's go back to the policy section. And one part of the policy talks about limits of liability and deductible obligations. I highlighted two things here that I wanted Kevin to address. One is how limits of liability work. We will see contracts, and we review about 1,500 contracts a year, where how the owner might define what your coverage is totally different from what a professional liability insurance policy provides as limits of liability. Kevin, can you talk about the per claim?
Yeah. So we've touched a couple times on the concept of how a claim is made against the policy and accepted. So limits of liability is dealt with in two frames. One is what's called per claim, and then the second element is aggregate or annual aggregate basis. And so when you buy a policy, on the declaration page, the limits of liability that you have will be shown there. You could have situations in an endorsement that's specific to a particular entity or situation or contract that would revise that, but essentially the limit of liability on the declaration page tells you first what is the amount of money above your deductible that CNA will pay for any one claim made against you during that policy term, per claim. So you have a claim reported, and your limits are $1 million per claim, $2 million aggregate. What that policy means is that for any one claim against the policy in that term, we'll pay up to $1 million. The second number deals with the aggregate, which is the amount that we will pay for all claims reported within that policy term. So again, using the $1 million, $2 million option, any one claim's $1 million, and on an aggregate basis would be $2 million. So theoretically, you could have two claims that pay $1 million within the policy term.
So if you have a claim and the total payment's $200,000, that means your aggregate is now not $2 million, but $1.8 million.
Exactly.
Right?
Every claim will reduce the aggregate. Recognizing that for many firms, you may have a host of clients that have a certificate of insurance requirement, or within your contract insurance requirements to say that you'll have a minimum level of professional liability coverage. That $1 million, $2 million option that I mentioned may provide some additional flexibility too, that if you have one bad loss within the policy term, the additional aggregate, that higher aggregate amount that you buy, allows you to continue to meet potentially the contractual obligations that you have for other projects. Because obviously having insurance available and meeting the contractual requirement is paramount to your ongoing services.
And Kevin, under this category is also information about the risk mitigation incentives. Can you talk a little bit about the two major risk mitigation?
Sure. So there's actually two elements within the policy that we deal with. I mean, being around like we have been and looking holistically over the last 61 years at claims and mitigators of claims, things that firms can do that we think will be effective to prevent claims or to provide a better element of defense against the claim being made against the architect or engineer. We came up with the risk mitigation credit. And that credit on the front level of the policy is a deductible credit, which essentially says that if a claim is made against you on a project, if you've taken certain risk mitigation strategies on that project, then we know either that the risk is mitigated or we may be able to defend you more effectively to save the cost. So we want to provide you as the firm with a deductible credit as to the amount that you may have to pay in that situation. And broadly, those mitigation strategies always start with the baseline that you have a written agreement in some form or fashion that pertains to the project for which the claim is arising from. And once you have that baseline, then we're looking for you to have several aspects of things that may range from managing your subconsulting relationships to make sure that they have the minimum required insurance required by the owner, that you've gone through a pre-project planning process with members, independent peer review or constructability review internally, and also maintaining a contemporaneous submittal log and following up on that too. So these are all aspects of practice that we think, if firms are following consistently, are going to lead to better actions. Frank, there is an element separate from the policy that, if people are doing it right, there may be a situation where, knock on wood, firm doesn't have a claim. And so in the premium process, there is an additional benefit for some firms that might have a recognition of that and have a savings to their cost.
So rather than
a policy
credit against the claim, it becomes a premium
credit against the policy. Correct.
And another part of the policy is conditions. One of the conditions talks about subrogation, and I wanted to address that a bit because earlier we talked about vicarious liability. The CNA policy has an automatic waiver of subrogation rights against an insured client if it's required by contract. It doesn't take an endorsement, doesn't take any other action. CNA ensures relinquishes its ability to go after the client if it had to pay for a loss on your behalf. Now, that doesn't happen very often, so that's an easy one to waive. But keep in mind that waiver of subrogation right does not extend beyond the client. Practically it does, but by the policy it doesn't. And it doesn't extend to your subconsultants, because anytime you either limit the liability of a subconsultant, waive consequential damages against a subconsultant, or waive subrogation rights against a subconsultant, you are putting your firm at a greater risk. It means that you cannot, and your insurance company cannot then go after that subconsultant for the damages actually caused by that subconsultant. As Kevin said, you are vicariously liable. That means you take the hit under the law. And if you've given up your rights to go after subconsultants by limiting their liability, by waiving consequential damages, or by giving up subrogation rights, that means you're going to have no ability to collect from someone who actually caused the harm. Policy also has in the conditions part about other insurance, and this is what the language says. And Kevin, just a little bit about this and what that means with project-specific insurance.
Yeah, we recognize that on occasion, an owner, or you may not be in a lead design position, you may be a subconsultant on the project, that one of the vehicles to ensuring that project would be the purchase of a project-specific policy. And so what project-specific policies do generally is they provide coverage during the length of design and construction, and with a predetermined time frame to report claims once construction is complete. And it generally covers the entire design team. So you may be included within that coverage as an additional insured, but you may not know that you're invited to the party until after the policy is in force. And so within the other insurance clause, what we recognize in that situation is that you could have primary coverage under those policies. So since you weren't part of the selection or purchase process, those project policies may be inferior to coverage or to adequacy of limit. And so proactively under the practice policy that you have, this would sit excess. Your practice policy would provide coverage over and above a project policy to the extent that the project policy denies a claim for which you already have coverage under your practice policy, or to the extent that the limits are inadequate and are completely paid. Then if you still have liability, that would extend to your practice policy as well. So this is really comfort insurance to recognize that since you're not in the selection process, a lot of times on project coverage, is the biggest risk you may have is that your primary coverage is there. Most insurance policy under other insurance is if the other coverage is providing primary coverage, then they must pay first. So if there's not a limit available and they got to pay first, you have a real problem. And then the second element is that in the terms of saving costs or what's of interest to the owner or to the lead design professional may be of more interest to you and not covered under the project policy. We're trying to resolve both those issues by utilizing this language and coverage.
And a question about the timing. A project policy may only extend for so many years. Maybe the actual design and construction phase and a short time thereafter.
Right. That's an important point, because when the claim is made against you, the claim specialist would review it to see if the other insurance applies. So in Frank's case, if this project had a specific project policy, but that project policy had expired or was no longer in force, it's as if the coverage never existed. So there's not other insurance in place. Your practice policy will be the primary coverage, and the coverage is available to you.
Okay, thank you. And let's talk about these two parts. I'll talk about the last one, but I'll let you talk about extended reporting periods. Well, one of the issues is that you have risk that goes on for many, many years. You could be held liable for something you designed in New York State, for instance, 20 years ago now, because in some states there are things called statutes of repose, which cuts off the ability of people to bring claims against you. North Carolina, I think it's 6 years, as it is in Tennessee. In other states, it may be 10 years or 15 years. So if you're getting out of practice, you need to have coverage until that time limit takes place, until that statute of repose runs out, because it's not until at that point that you're free from the risk of what you designed earlier. So, Kevin, extended reporting periods, what kind of options are there?
Yeah, so there's several options available. So within the policy form itself, the period of time ranges up to 5 years. And specifically in the policy, there's a cost associated with the time element for a 1 year, 3 year, or 5 year period. For firms that have been with us with our program for a significant period of time, there may be the opportunity to purchase a 10-year extended reporting period as well. It's referred to as the non-practicing extended reporting period in the policy. So it does vary. Frank, quick question to you is, as a practitioner, is there any rule of law or something that they should look at from the standpoint of the time frame that a firm needs to cover themselves for liability?
Yeah, when states have statutes of repose, they usually apply to improvements to real property. So what you do may qualify under that statute of repose, and when that statute of repose runs out, you're no longer at risk. Those laws were not put in to help architects and engineers, they were put in to help contractors. So you may be providing services that don't qualify under the statute of repose, which means that your risk could go on indefinitely. But in most states, when you're doing something that it leads to actual building, construction, that's improvements to real property, and that statute of repose will cut off your risk. But again, that may take a while. So that's why you need the extended reporting periods. You cannot buy an extended reporting period for one project. So, you may have a client who says, I want you to continue coverage and buy an extended reporting period for 10 years. Doesn't happen. You have to be out of practice for an extended reporting period to click in. The other thing I wanted to point out is economic and trade sanctions. We had a lot of interest by architects and engineers in doing projects in Cuba when it looked like there could be a major building boom in Cuba. But because the government never lifted the trade sanctions against Cuba, that meant that if you were a policyholder and you did services in Cuba, we could not cover you for any claims that came out because of that. So you have to be very careful about those kind of things too. If you're got a great opportunity in North Korea, you're not going to have coverage for it. Okay, let's move on to endorsements, because I think endorsements do a number of things. One, they help bring policies in compliance with state laws and regulations, whether it's because of reporting periods, because of coverage specifics. So just about every policy has some endorsements attached to it. They're listed in that policy declarations page. But they also can be used for other things. What other advantages could you acquire through a special endorsement to your policy?
Yeah, I guess to answer that question too is to recognize that the policy form that we provide through CNA is issued on what's called an admitted basis, which means that we're admitted in each one of the states, including Puerto Rico and the U.S. Virgin Islands. So we're subject to insurance department review and approval at the individual state. So to Frank's point, some endorsements that we have are due to compliance with state laws and regulations as part of that oversight, which is part of the benefit of being in that state and other aspects. But a lot of times you have situations that come up that are unique to your firm that you need to resolve that are not addressed globally in the insurance policy. So for instance, you could acquire a firm or deal with it in some form or fashion that would require a limitation on the prior acts coverage, maybe a modification of the deductible, or how the firm attaches for prior acts coverage. You may have other issues that come up with owner-required elements in contracts, et cetera. So endorsements are meant to solve individual issues that you have that can't be addressed by the policy proper. So similar to extended reporting period issues, I would say this is an excellent time, again, to talk to your insurance professional or insurance broker about the individual risk that you have to be able to do that. Oftentimes we issue these endorsements midterm, meaning during the policy term. So these issues conveniently don't come up at your normal renewal time. We can address them at any point as they come up. And then those endorsements can be carried forward or kept on the policy in perpetuity to deal with that exposure that you have.
Okay, thank you, Kevin. And
Frank, we just had a couple of quick questions on this. If we could highlight One question that came up, again, was around the limits of liability, and we talked about the reducing of the aggregate. So, Frank, just to clarify, like when someone has a $200,000 loss and that limit, $2 million aggregate we talked about, would be reduced, a point of clarification would be that underlying that, every policy may have a deductible with the framework of how that deductible is paid. So that's the insured's responsibility. So when we talk about payment of claim, any reduction in the aggregate that's listed would be payments made by the insurer. This would not include payments under the deductible. And that's a nuanced conversation too, because for a very small firm, there may be options for much smaller deductibles, some options that say that deductible doesn't apply to claims expenses. On the high end, for a much larger firm, they may have a significant deductible, $500,000 with some clarification. So just to clarify, that reduction of aggregate only applies to payments made by the insurer.
Sure. Okay. Thank you. And let's move on. For those of you who are our policyholders, I want to make sure you're aware of our School of Risk Management. You can go onto the Schnurr website under Risk Management. You can go directly to the Schnurr School of Risk Management through your browser, and it has a number of things on it. It has a great number of publications that can benefit you no matter what level you are in a firm, whether you're an owner, whether you are just starting out. It also has on-demand courses. This will be an on-demand course sometime in the future. So there's a number of educational resources on the Schnurr School of Risk Management. It's helpful to you in writing your contracts. There's contract information on there. There's benchmarking information so you can see what other firms are carrying and what kind of claims come up against firms, and a number of other really valuable tools. So please go to the Schnurr.com website and to the School of Risk Management and explore that if you're a policyholder. If you're not a policyholder, go there anyway and see what you're missing. Okay, and that's the end of this program, Understanding the Value of Professional Liability Insurance. I hope we were able to increase your understanding so that you can get more value out of your professional liability insurance program. And again, you will all be receiving an email right after this with a survey. If you're a policyholder, you will be able to answer that with your, for instance, your AIA number, or for a request for a certificate of participation. And I thank you, and please look forward to our next webinar next month, which will be talking about other types of insurance that a firm has to carry. Thank you.